Hello and welcome to Livewire's Fund in Focus. My name is Chris Conway. Today I'm sitting down with Adam Nankervis from Oak Hill Advisors. Adam is going to be talking to us about the T. Rowe Price OHA Flexible Credit Income Fund, otherwise known as OFLEX. Adam, thanks for sitting down with Livewire today.
Thanks for having me, Chris.
Can you just provide a brief introduction to your firm?
We've been around for over 30 years and we're an alternative credit investment specialist. We manage US dollars 98 billion in the credit space. And we've been doing that as the market has evolved. So syndicated loans, high yield, started out in special situation, distressed in the 90s, and have evolved with the asset-backed market and also more recently with the evolution of private credit in the large cap space. We're focused on developed markets in the US and developed market in Europe also. Yeah. We have 120 investment professionals and really try to underwrite our businesses.
Adam, what would you say if I had to ask you for one element? What's unique about the way that you invest?
The one element I'd say is we're trying to keep a consistent underwriting process where we really take a private equity style lens to credit investing. And what that means is we really focus on getting the industries right. We structure around those components. Mm-hmm. So as portfolio companies move from syndicated markets to private markets, maybe they're stressed, maybe they're looking for asset backed in certain parts of their capital structure. If you can have a consistent coverage and team who has a real lens of what they like within that sector, you can ultimately minimize defaults and harvest what is the credit premium. We also then supplement those with specialists in documentation, in sourcing, in special situations and distress. We really are one team in how we're trying to approach the broader credit universe.
Just talk to me more about that, Adam. What is the opportunity that you've identified now in the private credit space?
We're bringing to the market what is a best ideas fund of Oak Hill. As I mentioned before, $98 billion, broad platform across different credit spaces. And so we're trying to get assets to compete against each other to create a broad, constructive portfolio. And we've sort of broken down the market in everything we do, but it's really in sort of 6 areas. The first is direct lending, which we're sort of seeing 50% equity checks behind us. We'll be able to structure those documents. Second is similar junior capital, a little bit higher risk, junior in the capital structure, but higher return in that regard. Special situations, which as the market evolves and external shocks happen, we can take advantage of that market. There is the asset-backed market, where we're seeing that evolution happen before us in data centres, in telecommunications, fibre construction, cell towers, in transportation, in shipping, aviation, across that lens on the asset-backed side. And then we've got 2 liquid markets that we really follow in our platform. One is syndicated loan and high yield market, and also structured credit. And we're trying to use all of that lens to construct a broad, diverse portfolio and a real best ideas for the Australian market. Yeah.
Just talk to me a little bit, Adam. Obviously it's multi-strategy and you've just laid out all the different buckets that you look at. Are they all growing? Are they all, is this why this is such a compelling opportunity now? Because the growth and the money that's flowing into these opportunities?
Yeah, it's a combination. The direct lending market's been growing for some time now. Yep. That is more of a evolved sort of market at this point, still attractive. Mm-hmm. But they all grow episodically and it's hard to predict when they're going to happen. Obviously, there's a lot of capital chasing asset-backed type lending at this point, also in relation to data centres and telecommunications, like I mentioned, and that's evolving and growing. I think the special situations component, that can be a function of what happens with the economy over the next few years. And so that opportunity set develops and it's somewhat hard to predict. The goal is to not try and make those calls, but sort of react to the opportunities as they present.
You sort of touched on it there. What are some of the risks and then how do you manage them? Is it a matter of just pulling the right lever on those different options in the portfolio at the right time?
The risk component comes down to underwriting. Ultimately, you can talk about credit spreads, you can talk about liquidity premiums, but it means nothing unless you get your money back after writing that loan. And so what we're focused on is making sure our underwriting standards that we've kept for the last 30 years remain resilient and that process remains consistent. And we're also aware of the evolving risks in the market, whether that's related to trade, change in immigration policies on the labour component, AI risks that can develop in different business models. and sort of stroke of the pen risk that you see within the governments, given what used to be more healthcare, is a lot broader at the moment. And so, they are the risks, and that's what we're focused on, and it's not really anything new, but it's something to be really cautious of.
Yeah. Adam, talk to me about what role your fund can play in an investor's portfolio.
I think it's an important income generating fund. That's what we're focused on, particularly across the platform, is income generating assets. And so to the extent investors are looking for some diversification in that, I think diversification of the credit market that we're operating in, it's a $2.5 trillion private credit market globally. And we're focused on the large cap lending side of things. And so investors that are looking for a credit portfolio that have similar characteristics in size and EBITDA to the ASX 200, right, this is a great exposure for them to get that. I also think it's pretty attractive as an Australian investor looking to get diversification offshore in credit. Less correlation to construction, and less correlation to the Australian risk that can be all correlated to an extent.
Adam, thanks so much for sitting down with Livewire and taking us through that.
Thank you very much.
If you enjoyed that Fund in Focus, why not give it a like? And don't forget to follow our YouTube channel. We're adding lots of great content every single week.